We're looking at, yeah, I think 2+ years.
2 years now that we're
2
basically,
years, yeah.
we've been kind of, head on with a few of these things here and just engaging each other. I didn't start trading till like maybe a year ago. So we know each other for 2 years, but I didn't start trading for until like a year ago.
Conjunto de mi propiedad. A los becados no se le paga un solo money, que le van a hacer la presión de todo.
That's Peter. Pedro.
Pedro, okay.
Yo, what up, what up?
Hey, what's going on, Pedro? All right, so let me just...
Saliendo ahora para la práctica, los niños.
No, está bien. I'm just doing an introduction with everybody here in terms of, so I can get started. So like I was saying, Pedro is another good friend of ours, guys. We kind of started trading all together. For the guys that don't know Pedro, he hasn't been on here recently, but he will be coming around more often, and he's another person you can definitely look up to. I definitely looked up to him. I've learned a lot from him as well. He's very knowledgeable in what he's in Forex as well. Then I got Juan here on the top. Juan is my cousin. I've kind of give him a few. I've opened up some doors so he could see what it was that I was working on. He said this is interesting, and he's here for the same reason that most of you guys are here to learn. And then my friend Dollar Lot, that's Evelio Rodriguez, all the way from Tampa, Florida. Same thing. I showed him what I was working on. He got highly interested, and he's like ready to just take the world over with this.
No, la,
la. I got Jackie. Jackie, I've known you very little from the previous webinars, but I can let you do your own introduction if you like, just so everybody knows who you are, if you don't mind.
I don't mind at all. I'm Jacqueline, originally from New York. I lived in New York all my life. I came to Georgia about 13 years ago, and February 28th of last year, I left everything and committed myself just to do this trading and get my certifications as a life coach. So I finished my certifications, and I have my master's certification in life coaching, and now it's all trading.
Very good. Thank you, Jackie.
You're welcome.
The next person I have is Juan Correa. Same thing. I've known you just because of the school here. If you don't mind doing a small introduction of yourself, brother, just so everybody knows who you are. Everybody can get comfortable with each other. And that's the whole purpose. I want everybody to be comfortable so that way you can all of you guys can engage yourselves. Go ahead, Jeffrey. There? I don't know if he's there. I think he's there. All right, so we'll move to the next person. So we got Randy Tavares, another person, same thing. I met him through the school, one of JL's personal people. And give us a little bit of introduction about yourself, Randy.
How's it going, everyone? My name is Randy Tavares, from New York, Bronx, New York. I just recently graduated from Marist College. Played baseball there. Played baseball my whole life. Didn't get drafted. It's all good. So now I'm training kids and, want to learn this. I've always wanted to learn this. But, with season, playing summer ball, Cape Cod, New England League, and then going right into season at school, it was tough for me to get into this. But now that I have the time, I know this is a great opportunity to get in it. And, I'm pretty young, so I see this more as an asset and a long-term thing to have this for the rest of my life.
All right. Thank you very much. Thank you very much. I think Jeffrey lost connection. He just came back on. Jeffrey, what I was saying is we're all doing a little bit of an introduction, all of us. I think you're the last person that we need to kind of just introduce yourself, who you are, where you come from, and what's your purpose here.
Good morning, everyone. My name is Jeffrey. I live in New York. I'm from Brooklyn. I met JL through a friend, and ever since that, I was introduced to Forex. I am a finance major, and with this platform, I'm looking to invest later on and get myself into the stock market and investing in real estate as well.
Alrighty. Thank you very much. All right. Do you guys know a little bit of my story? I don't know if you guys heard my story. I know I've said it maybe one or twice. I know Gonzalez knows my story. Pedro knows my story. Evelio knows my story. So most of you guys know my story, but I don't know if all know. And like I said, I met JL through Jose Gonzalez, and ever since we met, we were good friends. I do come from a business background. I have built a successful company, and when JL introduced me to this, I really saw everything like extremely difficult, and I'm like, whoa, that's like a lot of information, and I kind of I got scared from it. I really didn't take it right away and started trading or taking it seriously. All I did was basically kind of, all right, can you trade for me type of thing. I didn't want to learn because I just saw all these lines. I saw all this information, a lot of data, and it's kind of like, whoa, that was a lot to consume at that time. So, all right, a year later from there, I kind of saw the power. JL kind of really exposed me to the power of trading. And what I mean by that is he literally showed me how he could take, $1,000 all the way to 60, 100. And it wasn't a fake account or a demo account. It was a live account, which we actually were able to withdraw money from there. And I personally withdrew money from that experience, and that right there, when I saw that happen, I was like, whoa, I'm in the wrong line of business. I could spend another 10 years doing what I was doing, and I will never ever be able to reach the level of success that I've been dreaming about for decades or years. And I made a business decision personally where I said, you know what, I've spent 20 years building an elevator company, because that's what I used to do. Build elevators for a living. I owned my own company. I've had 40, 50 employees. And I started that business from the garage, exactly from where you're seeing me right now. From this garage here, I built that company. I sold that, and I said, let's keep it moving to the next big and better things. And here I am.
So I finally can hear everybody. All right, good.
So,
yeah, thanks for cutting him off.
So with that being said, I like to think I've had the experience to build something already, so I know that, and I'm trying to communicate a message to you guys with what I'm trying to say. Before my company started really flourishing, it took the company literally like about 4 or 5 years plus. I went through a phase where, okay, I was building that company, and there was no money coming in, and I kept pushing and pushing and pushing, to the point that I needed to file for bankruptcy. At that time, my car got repoed. I had a brand newborn at the time, and I had to kind of basically take this, matters into my hands, in the sense where, look, having my wife literally kind of continue the journey with me, and her trusting me enough that I was doing the right thing. Well, guess what? That company that didn't produce nothing for 3 or 5 years, then started producing 10 million about a year, 5 years later. So I'm sharing that story is because of the following. You're not gonna get this instantly. You're not gonna get it in 1 year, maybe 2 years, maybe 3. You start now. Okay, you're starting to pay your bills somewhat, or if you're faster than others, what I'm trying to say is the consistency is what's going to count with this. And like in anything in life that you've ever tried to do, you probably started not knowing, just like anything else. But once you start doing it long enough, you start learning whatever it is that you're doing. Currently, where you work, if you're currently working right now, you probably didn't know what you were doing at the beginning, but obviously after a couple of trainings that you took, you probably understood that, okay, now you're getting the hang of whatever it is that you're doing. And it's just a story of morale that I'm sharing with you guys, in terms of just be persistent and pay attention and stay focused on the goal. Okay, the end goal is what really matters over here. So I'll wrap it up with that. JL was able to just come in. JL, let me just let you know what I was doing. I was just allowing everybody to kind of introduce themselves, giving a little bit of a background. I gave a little bit of my background for some people that don't know me or who I am or where I come from. We're gonna get started right now. You want to have any words to say before I start or before we start?
No, personally, we're trying to, you know, make sure that everyone understands that, personally, I've always had the commitment to providing as best and as much I can to the community. But, bringing in somebody like Jomar, I look forward to you guys working hard enough to eventually bring someone else in, right, Jomar? Like,
Yep.
Our goal is to create the community where, I hope that someone in this webinar right now is one of the next people to, contribute to our community, because at the end of the day, an added perspective and added experience is going to bring what the ultimate end goal is. And, I really don't have to get in too much into what I am and who I am, but at the end, I'm very appreciative of everybody, and I hope everyone enjoys this webinar here today.
All right, so let's just get started with the specific strategies that we've been adapting to for the last 4 to 6 weeks. And in this 4 to 6 week, I personally have seen some very, very different level of trading. And in perspective to that, I just said, yo, let's start sharing this so that people can understand. And I haven't really had a losing trade after I adapted this new strategy that we're about to discuss in depth and in length, so everybody understands it. And if you've been in the previous webinars for the last 2-3 days, the last couple of weeks, we've been discussing the same exact thing. But we're going to take it in depth where the market is not moving, so we don't have to be paying attention to no chart, but just the strategy. And then we'll look for the opportunities for the week. Sounds like a plan, everybody? Can I get it? Can I get it? Amen. Great. All right. So real quick, we created a little spreadsheet just to discuss exactly what it is that we're going to discuss it. I'll be sharing this after we're done with the webinar. I'll send it out to you guys via the group, and so you guys can have it as a checklist for you guys. All right. So moving averages, if you guys don't know what a moving average is, we have been implementing 2 moving averages, actually 3. And a moving average is simply a way to smooth out price fluctuations to help you distinguish between typical market noise and actual trend reversals. And we have been using 3 exponential moving averages, specifically focusing on the 10 and the 20. We will be using an exponential moving average, which will be the 10 and 20 moving average. We'll go through an explanation how to plot that on the chart if you haven't seen it. We'll show you how it works in a short period of time. Then we have what you said?
Or you were dead for a second there. You were cutting off.
Oh, okay. My bad. I mean, I guess we have some.
No, it was probably me. My bad.
You got it.
Continue.
So the next indicator we've been using is a MACD, moving average convergence divergence. Pretty much, that's what the MACD stands for. The moving average, as expressed by the MACD, is essentially the average of price over a certain set of amount of time, and the MACD enables easy demonstration of relationship between 2 exponential examples of the moving average. Okay, guys? We'll go into depth on the charts a little bit right after this. Then we're going to be looking at Fibonacci retracements. Fibonacci retracement is a tool we use to measure the retracement percentage based off the previous trend. For instance,
sorry.
You got it. No, don't worry. We're all going to get a chance to discuss. I'm just going over what the main goal is today here in this webinar. The Fibonacci retracement tool we use to measure the retracement percentage based off the previous trend. For instance, if the market was trending upward and then the market began to drop and it hit the 50% retracement level, the market in that case had to retrace 50%. Based off that previous trend level, you must have on your Fibonacci retracement tool, you should be in the following, any of these percentages. Based off the standard, yeah.
Sorry to cut you off, but I would imply, if you can, please do take notes of what Jomar is saying, because it's very, very important.
Yeah.
I don't know if you emphasized it earlier before, but Fibonacci levels, EMAs, and daily moving averages are very important to the strategy that we're using. So please do take notes
All right.
because it's only going to help you
Yeah.
become a better trader.
This webinar is being recorded, so people have a chance to go back and look at what we're discussing here. But it definitely, if you take notes, it'll be better for the memory. It's memory power you're looking for you to write it down. When you write something down, you're gonna be easier for it to remember. So just keep that in mind. So if using TradingView, these are pretty much, so this is an example of how we've been using the Fibonacci. Pedro, and I don't know if you can see this correctly, but I know this is one of the things I wanted to personally discuss with you. But since you're on here, this is great. These
Also, can you? My apologies for interrupting, but this image was the incorrect image. This was my personal fib levels, but I kind of rounded up. So if you can show on a live chart like the regular standard fib levels along with the additional levels, because you see here I got the 39.24. All I did was just round everything up.
Okay.
So
I have in a separate, I put in the Discord chat the actual settings to the fib level. We're gonna go by that. We're gonna go to that then now. So the point is, we're gonna review where we're looking at here is we're looking at all the tools that we're using for the strategy. Right now, these are just discussing the tools, and then we're gonna go to the charts and put them all together. Okay, guys? So that's the Fibonacci. Steps to follow as shown based off the 3-step systems. Always start off the higher time frame to identify which direction the market is going to be going long term. Confluence is very important in this case for swing trading perspective. Apply your fib level to the higher time frames, can give you the parameters for a great execution on a swing trade. All right, so this is the bread and butter of what we will be discussing and reviewing now. I'm going to put on a chart and let's go to the charts. So let's start with, we should do this on either EU or UCAD or UJ, because from what I've seen, I looked at these 3 trades already yesterday. These trades are like prime for us to take them very soon. So these are going to be probably trades we're going to be taking this week. So let's go to UCAD, as that's been one trade. And I'm going to clean my whole chart all over again. So that way we can start from the beginning for the perspective of the educational purpose. All right, so when you're going to start breaking everything down, you want to start from the monthly. You want to see what is going on a monthly perspective, what trends do you got going on, and you want to start identifying them, right? The immediate one trend that I kind of have seen was this right here. I see. And then you have another trend from the bottom over here. Yes. Pretty much, technically, from that perspective. You need 2 touches or more to confirm a trend. JL, what's on your school? What do you have, 2 or 3? You there? All right. I know
3
that
to confirm.
3 to confirm, but from what I've been studying, I've been taking 2, right? Because the third one is going to actually make the confirmation. And technically, once you have 2, you can make a trend line. Once you have 2 points, you can make a trend line. And then if the next one can basically either break or you just have to adjust, is how I've been doing. You could adjust. So let's say if we put,
remember, add on to that, the idea that everyone should understand is how many touches confirm the trend. It's 3 touches, right?
Yeah, we
2
were just,
touches.
We were just saying that, but I don't know if you heard. We were talking about.
Yeah, no. I was trying to chime in, but it's always after the 4th touch that decides which direction it's going. So if the market hits the trend line twice, you know, although let's say the price dropped 150 pips, and it can still come back up and still confirm that trend. Make sense?
Yep. So as you see how I've been moving this top trend line, there is no real right or wrong answer. You can move it. There's many ways how you can identify a trend. It's what's going to work best and how price is moving as it's moving. So let's say, for example, if I'm using the top wick from here and I'm using this as my trend line, I actually like that. There is no break right here. You got 1, 2, 3, and technically with this monthly close, well, this candle hasn't really closed, to be honest with you, yet, because this is the new month of February on this current candle. But we do got, if we put it right here, we have 2, 3 touches currently going on right here, right now. But the point is identifying the higher time frame trend to know where are we within price. Once we identify that, you can identify some support and resistance areas is what you're going to want to do next. So where do we have some resistance areas or resistance zones, you know, and you want to try to identify those zones. Where do we have resistance best? And another thing I want to keep in mind, so your analysis doesn't have to be so elaborate. Keep it within where price is at now. It has to be kind of, I know that we have price data back here, but guess what? The price data all the way down here is irrelevant to where price is right now. So if I draw a trend line here, it don't matter. Price is not going to reach there right now. Okay? So I want to be relevant to where current price market structure is. So keeping that in mind, so that way you don't have to go crazy identifying 1,000 lines, because how I've seen some people do for the most part. And I just want to keep it simple to where price market is currently at the moment. That's all I want to know. So we're keeping that in mind. I know I have this bottom trend line here, but if you could clearly see there's some resistance going on right here. For 4 months, this price level up here, above here, has not been broken. 1, 2, 3, 4, 5, 6. We've had 6 candles reject this whole entire area going on here. So that's a clear sign of a resistance area right here from a monthly perspective. Okay, guys? All right, so I've identified that. You know, I have my support area here too from a monthly perspective. Let's say, let me see, where is a good area? Let's say this area here. And once again, everything is to what your eye is seeing. Wherever I place my support and resistance could always be adjusted into what works best, okay? So when you go down the weekly, let's go down furthermore. What do we see? You know, you could start seeing further things in terms of where price is at. You could see that there's another, you see that trending right here. It's been kind of also trending these bottom lows here. You got low, lower low, and lower low, as you can see. And these are things you want to identify as price is now moving in a downward channel, as you could say here, or this is also considered a bullish flag if you look at it from this perspective. You have to train your eyes to see what is going on from all angles, all right? But I don't want to confuse you too much. I just want you to understand to look for these things. You need to look exactly for what's going on everywhere. So let me remove some of these lines real quick. Right,
and
so,
to add on to that, well, to add on to what he's saying there is, you know, it's always important, like for everyone here, it's always important to remind yourself the following questions. There are 3 very important questions I've learned, you know, and I've listened to a lot of people talk. And one of the 3 most important questions everyone mentions is what happened before, what's happening now, and how it reacts after. You know, that's very important because if you follow the sequence, observing the charts or whatnot, you know, putting yourself in the predicament to understand what happened before, what's happening now, and what happens after, you kind of already put yourself ahead for when you're observing the market again later on, let's say today or tomorrow. You already understand what happened before, what's happening now, and how it happens after. You understand? So when he was talking about the bullish flag or identifying the price area, that's why it's important as you're marking up your zones, marking up your chart, you're putting together the idea of what happened, what's happening, and what could happen. And that's how you start to develop a sense of, okay, I remember the breakout here. We need to see a retest. What's confirming? Boom, you know? And you start plugging the pieces together.
So step 1, okay, guys, just so I'm going to recap every time I move from step to step. Step 1, we went to the monthly. We identified some trends of where the trend was going. We put some trend lines, some lines there that kind of connected the dots with 3 or more confirmations of touches, okay? Then we're going down to the weekly and see what we see, the same exact thing. The next piece of the puzzle is one of the most lethal weapons that I'm going to show you right now. And I call it lethal weapon because for the last couple of weeks, this thing works. And I can show you this on any chart I have not broken down with my eyes closed, and it works, period. That's all I have to say. So the next thing is, here's one big key piece of this puzzle. Your Fibonacci. I don't know if this can be seen clearly. I put from the Discord. Can you guys see this picture?
Yeah.
Yes.
I don't know if the numbers
Yes.
I don't know if the numbers you can see them clearly, but I'll throw the Fibonacci level now. But if you all guys go to the Discord, in the announcements, you're going to see I threw this so you guys can copy this exact same setup for your fib levels, okay? And I'm going to show you why. The same exact numbers. I don't care about the colors. You can use whatever colors you want. What's important here are the parameter inputs for the Fibonacci levels, okay? So it's in the announcements in the Discord. So if you don't know where that's at, you just go to the Discord, you look for the announcements, you scroll up, and you will see it here, and just copy all the fib levels. And if you need assistance in doing that, just DM me privately and I'll help you through that. But okay, so once we have that fib level identified, I want to know the following. This leg extension on the weekly, and this is important, do this from the weekly all the time. This leg extension, this is one leg, this is another leg. Every time a price reverses from one point to another, that's a leg, okay, guys? This is a leg here. 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 From here to here. From high to low, you always have legs. And you want to identify where the leg is. Right? Now, when I remove this, I'm going to remove the candlesticks. Like I just plotted pretty much overpriced these legs. Here's what you see. You basically see what's going on from a point-to-point area. The market moves in waves, and the market moves in M's and W's. Do you see plenty of M's? Do you see plenty of W's? Can I get a yes or a no?
Yes. Yes.
Do you see W's and M's?
Yes and yes.
Okay, so here's the next thing. After any M, you're going to see a completion of a W. After any W, you're going to see a completion of an M. Okay, so keep that in mind. So that's one thing to keep out for. So that's, so what I'm saying here is basically the following. What should I expect at this next zone over here?
Would it be a retest?
Okay, what I'm looking for is the next extension or the next leg, right? It should be now the completion of another M, is what I'm trying to say. So the retest, you won't see it from a weekly perspective. You're gonna have to go down to the lower time frames to see that. If you notice, look, price went all the way down. You don't see a retest in none of these moves. But if you go down to the 4-hour or lower time frames, you will see the retest and breakouts. But we're gonna get there. This is gonna be a step-by-step process. From a weekly perspective, these take a more time to retest. So, and the strategy is right now, all we want to know is where's price action when you throw on the Fibonacci. And I want to identify where price is from the previous leg. So here's what we're going to do. We're going to pull out the Fibonacci. And this is the next step. This is step 3. Fibonacci, where are you? Here's my Fibonacci. I'm going to measure the previous leg from the highest point from the wick to the lowest point of the wick. Okay. Now, the golden areas that you see there, everybody's used to calling the 61880 the golden zone. I added 2 more golden zones to what everybody calls the golden zone. I got 3 golden zones. I got the 127.20 golden zone, I got my 61.8 golden zone, and I got the minus 0.20 golden zones. Instead of one like everybody typically has right now, I got 3, and I'm going to show you why. Typically, from what I understand or have been practicing for the last couple of weeks, price will tend to reverse from this area here or this area here. And that is what we call an extended leg, okay? Now, price could start reversing from here. It has a good potential because it has made already a very, very big impulse to the upside, and it's already at a trend line. There's a trend going on somewhere here at the above area, so it's a high probable area that it can reverse, okay? So you have to understand it. It's a high probability. It's not a guarantee, okay? So knowing that we're in a high probable area of a reverse area, we are going to identify, okay, you know, I can take the trade from here possibly if you see all the signs aligning. Or if price continues to go to the upward, you know, push, price can possibly reverse from the 127.20. Very highly possible trade idea. So you see the previous leg? The previous leg, I took a trade from the previous leg at the beginning of January, and that's exactly how I identified that area. I'm going to show you. So I'm going to remove the Fibonacci currently right now. And for those of you guys that are not with me or I'm going a little bit too fast, just let me know, repeat that so I can kind of just, you know, get you to understand what I'm explaining here. So from the previous leg, I'm going to show you how price reacted at that level when it happened. Let me remove the Fibonacci. And I'm going to re-put the Fibonacci now. I want to know, where did price reverse on the fib level from this leg from high to low? So I'm going to measure my previous leg from low to high. And can someone tell me, where did price reverse?
127.
127, correct. All right, so, okay, good. So that we know from the previous leg. So how good is this concept that I'm explaining? How really good is it? How really, really good is what because I want you to really understand that this is a key thing to this whole strategy that we're explaining. Let's go to another leg. All right, so let's see, let me see. Let me pick a leg here.
Now I see where the sniper entry comes from.
All right. Let's pick this leg from here to here, but this is not an extended leg. From my eyes, I already know it's not an extended leg. This one reversed from the 61.8. Now, how do you know that? Because whenever you measure, so you understand, whenever you measure a leg from high to low and it reverses to the original point, that's only 100% reversal. But in this particular case, from high to low, this leg here came back 100%, but extended even extra more. So from the back, without even having to put the Fibonacci, you could see that happening. So let's say this leg from here to here, I could see that price extended because it's more than the original entry, but it didn't go all the way possibly to the 127, but it got very close. But just for the purpose of showing you what I mean, I'm going to measure the high to the low. The low to the high. And this one only retraced 100%, but didn't hit it all the way. Okay, good. So that's not a great example of what I'm trying to explain, but I'm going to look for another one. Okay, let me see. Where do we have one? We have none here. Okay, here's a good example. You see here, this one from here to here came to the original entry and broke higher. Does everybody see that? I'm gonna highlight it here. This area here, from the high to the low, you see how it broke past the original point where it actually reversed, and then it went exactly right back to it and extended. If I put the Fibonacci, this area is at the 127 reversal. Look. High to low. Look how on the money price reversed from there.
Jomar,
Yeah.
for the last one, the one that you said wasn't a great example, would you say that one is a bad trade entry? Just kind of.
No. They're all good. Remember, everything in trading is a probability. So that's the reason why if you take a concept, and we're going to get to that point, you're going to use your stop loss very tight to your entry. Because in the event that your idea did not work out, you're out of the trade with a very minimal loss. Because the idea that you were looking for is invalid at that current moment.
Thank you.
Okay? So that's the whole idea. But the probability of it reversing is what you're looking for, confirmations and confluence. So I'm going step by step through all this, because what we're going to do at the end of all this, we're going to use trend lines, support and resistance areas, confluence of the Fibonacci level, all together when you're trying to determine this at the end. I'm just doing step by step. So that way, when we get to the end to go do a full evaluation, you're going to understand it makes sense why you're looking for all these signs of confluence. So, because you're going to build them up as you get a one sign of confluence, a second sign of confluence, a third sign of confluence. The more confluence you have, the more of the odds the trade is in your favor. 2 signs of confluence, not enough. 3, okay. 4, you're great. 5, you're going to be on the money. So the more signs of confluence is very important, okay, for this particular strategy. And the strategy we're discussing is basically swing trading, because when you're going to take any of these trades, it's going to be to hold them for more than one day. It's not going to be an intraday trade setup where you're in there for 60 seconds, 15 minutes, or an hour. No. These are trades that develop over a course of anywhere from 2 days to 2 weeks to 3 weeks. It all depends how the market is moving.
I'm already excited for this coming week. Holy moly.
Oh, you have no idea, bro, because when I pull out the trades that I got for you guys lined up, when I show you all these things that are going on, we got a lot of a high probability in our favor currently going on right now. So let's move on back to here. Let me remove the Fibonacci. Anybody have any questions on that Fibonacci, how I was explaining it, on what I'm looking for? Any questions?
I'm good.
So
Thank you.
We use the leg before the Fibonacci.
You
the
don't,
leg before to identify what's going to happen next.
Yes, you don't measure the current leg. You measure the previous leg to see where price is moving towards to. Okay, the whole point of this is you're not going to. Okay, the normal way how most of the traders explain to look at the Fibonacci is to measure the actual leg. Where's the price in the actual leg? I'm not using it in that. I'm going to the previous leg. I want to know from high to low where's price in at the retracement of it, because I'm looking for the reversal now coming back down again, and that's what I want to catch. Make sense? Yes? No? Does it make sense?
Yep.
Okay.
Yes.
Okay. All right. So great. So we identified that, and let's use UCAD as an example. So UCAD, okay. So what do we got UCAD on the weekly? We got a strong rejection area here. You know, it's at a trend. It's at a trend that is downward movement from the monthly time frame. Another strong situation going on here. So you got 2 signs of confluence already. Okay. From a Fibonacci perspective, right now, price has pretty much moved significantly to the upside, but it's still not where I would love it. But it can drop from here, is the point. Why? Because there's a trend line right there, and there's a resistance zone here that price needs to break through very hard from this area here in order for it to go to the upside. So what we have to do here is wait to see what's going to happen is basically the bottom line. And that we start identifying in the next time frame. Okay, so now we identified that this is a heavy area of reversal. And if it's not here, we're going to look for it on the daily, see what's going on the daily. So on the daily, right now, from the daily candle, it closed below that trend line that I have there. It closed below that whole area we have there. Okay, now, what do we want to put into perspective? You know, the next thing that I think JL didn't put in the spreadsheet is also identifying, okay, I'm looking for this trade for this week to see if it's potentially going to drop this week. And I want to go to my news events calendar and let's incorporate what news we have going on for the week to see if we can see some potential for a big movement. Because obviously, as you guys very well know, news moves the price depending on how it is going to impact that currency pair. Forex Factory. Once I go down to the daily, I want to see on the Forex Factory what news events we got for the week on the dollar or Canadian news. So far, Monday, we got some Canadian news here, but no red folders. Okay, I'm looking for red folders. USD on Tuesday. Okay, we got a red folder. We got a red folder here. Fed Chair Powell testifies. So we have to do some due diligence on there. Do we have any CAD news? Nope, no CAD news. Okay, great. Wednesday, another red folder for the US dollar. The Fed Chair Powell testifies. This is pretty much speeches. So it's not reports technically. And what we're going to get into is identifying how is this going to impact the currency pair. But technically for now, this is kind of one of the things I am working on so I can help you guys take the proper trades. This is what JL and I are doing, where we'll identify or investigate how is the currency going to be affected by these related news events. All right, Thursday, we got more news for the dollar. We have not seen one red folder for the Canadians yet. And Friday again. So we got all week, we got USD. We have a lot of USD red folders indicating to me that we're going to have to definitely wait what's going to happen in this area over here. So potential to the downside could be a probable, but potential to the continuation to push to the upside is also a high probability if they have positive news for the dollar. All right. Another thing to consider is also as well is, we have right now a global epidemic with that coronavirus thing going on right now. And the only reason why you want to take that into account is because we already have the first U.S. American die of it. And that potentially could make some negative impact for the U.S. dollar. All right, guys, but don't get yourself too wrapped around the news. That's going to be something that I'm going to do for you guys. The only thing is I want you guys to focus on price action and identifying what's going on. So from a perspective on this trade, we still yet need some more confirmations for the failure. For this to kind of reverse. So with that being said, now we're going to go look at it on the 4 hour of what's going on over here. So from the 4 hour perspective, you see the heavy rejection here. Now, here's something that I'm going to want everybody to pay attention to. You need to pay attention to every detail because every detail counts on when you're going to look at a trade, all right? Notice how USD CAD moves. What you're going to want to do is when you're on the 4 hour, you're looking for the short, and obviously you can take a buy to the upside, but it's not going to be long-term lived because it's already moved substantially to the upside, and we're looking only for shorts. I'm only looking for shorts at this current moment. I'm not looking for buys. But you want to basically identify what is the behavior of this particular currency. How does she move before she does big moves? And here's one thing that I've started to identify with most pairs. Okay, before any big move, you have heavy consolidation. Heavy consolidation. Before you see the big move from those reversal points, you want to see the heavy consolidation. Okay, heavy consolidation. When you're at these pivotal points of reversal points, you got some consolidation. It doesn't just make the move instantly, there's consolidation going on. Heavy consolidation. You want to see the consolidation. Consolidation is good. That means price is building up, building into the favor of probably of where is this going for you. So you see how I boxed in all these areas on the 4 hour? You see them? Can everybody see that?
Yep.
All right. So basically, what do I have here? I'm consolidating right now. I'm consolidating. I can potentially push to the upside, but I started to see consolidation here at this pivotal point from UCAD. All right. Learn your pair. Go back in history and understand how this particular pair moves. Because it's going to tell you what she's going to do. All these things, all these confirmations is going to prime you to understand the next move. You're seeing the consolidation, but you also want to see these areas of consolidation or particular behaviors at particular price point areas that are of importance. For example, we're doing this right on a trend line. We're doing this right at resistance. Does it make sense? Yes, no. Yes, yes.
Yes.
Okay, great. And the only reason why I'm saying that is because what we're looking for is get ready, get ready. We could potentially still maybe push to the upside, which is fine, but we don't take the trade yet until we get the final confirmations. Okay, so what are the final steps to this whole entire strategy? All right, this is where the indicators come in, because the indicators are going to show us signs of weakness now. So I'm going to reset the chart. We've already identified all this stuff that's going on, right? And now I'm going to throw in the indicators that we've been showing you. So hope everything looks clear here. We have the yellow EMA, that is the number 10. We have the blue EMA, that is the number 20. We have the white EMA, that is the number 200 EMA, okay? And below you have the MACD, okay? So let's study what happens in history prior to the move, before she moves, okay? Before the move, you're going to see a squeeze in the EMA, okay? You're going to see a squeeze in the EMAs. The MACD will give you the first sign. And let me see if I could highlight this area here. The MACD crosses over first before she gives us signs that she's going to potentially move. We get an arrow here. Okay, look at the MACD, the cross line. What does that mean? That MACD, get ready. We're not ready yet, but just get ready. We're about to come down. We're about to go up. Okay, you have consolidation at support, right? You have consolidation at support. You have the MACD that crossed. If you look at the histogram are the bars that are giving us signs of upward momentum now. From the downside, it now flipped to the upside. If you see the zero line, which is in between right here, the histogram bars are printing to the upside now. We have the MACD that crossed that is giving us signs. It has yet to have moved to the upside, but then here we get a break. Check this out. We get a break right here. Pretty much, let me adjust this. Price breaks above that zone here, comes back to retest. The EMA finally crosses over, and then it takes off. Never comes back. Finds another support, continues moving up. We're only going to use this. These only reason why we're using as the indicator is for the entry points of knowing when to get into the trade, so you're not getting into the trade too early. Because one of the most important things is market timing. Most of the time, and most of my experienced traders on this webinar can tell you this, the following. You were right on the trade, you were just too early or you were too late. And market timing is the most, or everything's important, but market timing is extremely important. Why? Because it's gonna be the perfect timing when you take the trade, so you have to little to zero drawdown. Little to zero drawdown. And that is, once you're in the trade and you're running risk-free, the market can do whatever she wants as long as I don't give money to the market. Make sense, guys?
Yes.
Okay. So look at it again. I'm gonna show you one more leg back over here. Look, consolidation on the 4-hour at a resistance area. Right? So when we identify all of this, I'm not using the EMAs for nothing else. I'm not using the indicators for nothing else. All I'm using in the indicators is for like the final piece of the puzzle. I'm at resistance. I have a trend going on over here. I have identified, I want to see all these confirmations. The only reason why I'm using the EMAs is not to take trades, is more to identify market timing. Am I on time with the trade? So before it takes off and I can get in the trade. Okay, you got the consolidation going. You got the EMAs squeezing at the same time. Okay, and then pretty much you start pointing out these areas over here, okay? On this particular setup, had you got in at the top, you know, you would probably never have seen drawdown, which is another conversation I'm going to have with you guys right now after this one. So we got the squeeze, we take the short, but here's another key thing to boxing out the range of the market, all right? For as long as I know, for as long as I've been learning how to trade, you buy the low and you buy the lows and you sell the highs. Is that accurate?
Yes.
Is it accurate to say that you want to buy the low and sell the high?
Yes, sir.
Okay.
Yes, sir.
So if I'm looking to short this right here, where are you going to short it? Are you going to short it from the low of the range, or are you going to short it from the high of the range?
High.
Okay, so great. So if you box in a consolidation zone, right, and you want to short this and you want to get a sniper entry, you want to get a entry that people are going to be like, yo, how the hell is he doing that? All right, you box in the range, wait for price to get up here because you see it ranging. It gives you the chances to get in. You want to short it. Don't short down here, short up here because you sell the high and you buy the lows from the range. Does it make sense? Does it make sense?
Mucho sense.
Okay. Because guess what happens if you buy the low and price moves up? Here's what the typical nerve-wracking trader does. Fuck, I'm in drawdown. And then you're like nervous and you're like, fuck, but it hasn't broken the range. And as long as it doesn't break the range to the upside, the trade is still in your favor. But you took the trade probably too early because you were watching it down here, or you took the trade probably too late. And then what happens is when you're experiencing this ranging market, you're seeing that your MT4 is going in red, red, blue, red, blue, red, blue. Yes or no? Have you guys experienced that?
But also mention how price action is important in that sense.
No, I know what I'm saying. In the sense that you're identifying that what you want to do is, you know, basically take these highs. Because what are you going to do? So if you're going to target a trade for an execution, this is how you set it up. So you're looking for the setup. All right. You want to probably get in somewhere around here, right? Identifying, you know, your targets, you know, and keep it simple. Put your stop loss right above that box range. But you want to take the high. Take the high. Sell the high. Don't sell the low. This will avoid you. Say you do get stopped out. Great. It's fine. You lost only maybe like 20 pips. That's about it. You didn't lose 50 pips, 100 pips, is my point. But the risk to the reward is where it's important. You want to target. What is the target? And I've been using also the Fibonacci's to identify my targets. Because guess what? Look at this Fibonacci that I have placed here and look how it reacts to these levels. Look, it reacts to Fibonacci levels, every single level. So what I've been doing, which I told you, you know what? Moving forward, every Fib level is my target. Look how price reacts on the Fibonacci. Doesn't matter where you put it. Look, there's a resistance, support, breakout, continuations all over the place. So
correct. That's why I'm a big fan in identifying zones in that case, because you know what price areas based off past price action, you're seeing where and when the market could do what it does, and that's why Jomar mentioned just now using the fib levels to kind of, you know, help you decide if we're in the right area or not. You know, at the end of the day, every breakout needs a retest. So when we identify a key level broken, what does that give you? If let's say you were entering this trade and another opportunity presented itself, it doesn't mean that all of a sudden we stop there and, you know, we're putting ourselves in the position to, you know, just hold that one position. No, if opportunity comes again, we hit it again. And that's something that you know, Jomar and myself have realized, that when opportunity presents itself, although you are entering the trade, keep in mind, just as much as you're looking at how much you're willing to win, also keep in mind how much you're willing to lose if it doesn't go your way. Right or wrong?
Yep. One of the things is, before you're entering a trade, always know what you're willing to risk. If you take a trade without knowing how much you're willing to risk, then you're gonna lose more, because basically what you need to set up your mind is for what if you're wrong. If you're incorrect, then basically you're cut off the trade at a particular exit point where the trade becomes invalid. Okay, guys. So here's another thing. So there's the typical way I've seen other many traders explain how to take this trade is basically they wouldn't take this high. This is just how I'm taking the trade. So there's two ways to look at this. You got the aggressive trade and you have the conservative trade. Okay, so the aggressive trade is the following. I'm taking the trade from the high, but most traders, what they do, they wait for the break and the retest to take the trade. That is the conservative trade. This is the aggressive trade, but the aggressive trade gets you in a lot earlier and way better. Okay, so here it is. Look, the box is ranging. I'm ranging in the market price here. I said, let me take the high. All right, but if you missed the taking the high and you want to really get in the trade and price starts moving, you get a second opportunity, buddy. Wait for the break of the range. Look at the retest right here. Look at the retest. Broke it, came back, retested, continuation. Here it goes again. Look at the fib level, okay? Broke the fib level, came back, retested once, came back and retested twice, came back and retested again, kept going down and kept moving. From a 4-hour perspective, now there's another thing that you guys, I'll leave it up to you how you guys want to take the trades. I've been taking the trades from the 4-hour, nothing less. It gives me a better sense of what's going on overall in the market. Some people like to use a 15-minute, 5-minute for better execution. But if I'm executing the way I'm telling you, an example, boxing the range, waiting for the high to touch again, I'm going to get a good position if it goes in my favor of how I'm looking at the trade. I'm going to get a good position if it breaks and I come back to the retest and I see it on the money, or place a pending order. The break, pending order right at this level, and you get in instantly once it taps that price area. Does it make sense?
Hey, John Moore?
Yes.
One last thing. On your last push up, like where you said you would take that trade, you can look at the MACD and you see very little volume, and then it crosses the zero line. That's another indication of, yes, you're ready to take that aggressive trade.
You're talking about a hit to the upside right here?
No, the example you've been showing us, where you would have taken that trade at the top?
Yeah, the trade at the top over here?
Yeah, right.
Yes. If you look at the volume for to the upside, yes, she is right. Look at the volume. There's very little to no volume.
Yeah, on that last push is hardly any, and then it starts to cross the zero line.
Correct. You are 100% correct, okay? And then you see that low volume, you see that in your favor as well, okay? So just have to pay attention to all this stuff and put it all together. All right. So now let's go back to current price action where price is. So reason why I'm still not convinced on the trade with UCAT for final confirmation, I still haven't gotten a squeeze with the EMAs, although price has been squeezing, but I want to get a squeeze like this. The MACD already crossed. Look at the MACD over here. The MACD already gave us a cross signal. The histogram is printing bars to the low side, but we lost some momentum. So we have to allow price for next week to continue doing what it's going to do. If I want to get the aggressive entry, what do we do again? We take the high, right? We're going to buy at the high and put a stop loss right above the range in the case that it just breaks to the upside. If the price breaks to the downside, we wait for the retest, and on the retest, we take the trade. So those are the two ways we can enter this trade, technically, and which we're in waiting for it, okay? So we're waiting for USD CAD to make this move for the week. It could be any given day next week. We could possibly maybe start seeing pressure to the downside, or we could start seeing pressure to the upside. So I'm going to show you another thing that I've been using as well, JL and I, is that on my FX book, if you guys never been to this website, okay, and these are just signs of confirmation. This is nothing that everything's 100% in stone, but all you want is to start continuing to build the confirmations. You want to build the confirmations. Okay, So my FX book has a tab here where it says community, and then it says Outlook. And when you go to the Outlook, right, what my FX books does is that they provide a data on this page that basically compiles all the traders that are connected to my F books and gives you a sentiment of the market, or at least the traders that are connected to my FX book from a perspective of, okay, what are kind of, where is most of all the other traders are? Where are they, you know? And if you go to UCAD, when I hover over UCAD, from what they have recorded, it's not all the data, because what happens is the Forex market is international banking, and you're not going to have all the data centralized in one specific server. So all we are relying on is on the sentiment that my FX book right now is able to collect based off all the registered users that have their brokers connected to my FX book. Okay, so currently, from a perspective of looking of the sentiment on my FX book, you got 96% of all the people shorting against 4% of all the people longing. Do you see that? And if you want it more and deeper, you go into this USD CAD Outlook, and I go to the 4-hour time frame. Okay, and I put how many positions from that perspective are here, and you can clearly see there's 260 right here. If you look at over here, when I hover over this information, there's 260,563 positions versus 23,300 positions that are going still long. So giving me another sign of confirmation, hey, there's a lot of selling pressure going on over here. Is it guaranteed? No, because nothing's guaranteed. But I have another confirmation on top of what I have of my analysis, okay? All I'm waiting for is the final touch where I'm gonna get the squeeze on these indicators, so I can, if I wanna be conservative, I wait for the break to the downside. If I wanna be aggressive, I take the trade from the high. But let's think worst case scenario, the price continues to push even higher. I got in the trade, but I got stopped out because it broke the level of this range over here, and I'm out of the trade. Where do you think price is going to next if I go to the daily higher time frame? It's going to break above over here, but we have to break through all this. We will continue to monitor this trade until we get all those confirmations in line. And in the event that price doesn't reject over here, in the event that price doesn't reverse from over here, I'm going to continue to monitor it, because technically, from a technical perspective, I'm waiting for the reversal. I'm looking for proper market timing, proper structure. So if price breaks above this level, above this resistance zone, above this trend line zone, basically what can we see? Potentially, if that's the case, we're going to see price hit this area here, which if you look 127 area, always look left when you don't know what's going on. Look where it aligns. It aligns with the next zone. Look, it aligns with the next zone of resistance. And we can see basically the following situation going on. We can see that, let me see, where's my arrow, where are you, arrow? Come on, okay, here. Price can potentially break through here, hit over here, this area, and then I can take another short here if it doesn't do it here, and it's breaking out, and what it could potentially do is either two things. It's either gonna be a fake out or a retest. Either way, whichever it is, it's gonna come down from this area, no matter what it is. Either a fake out is gonna come down, or if it's gonna come back to retest this zone that it broke out of. Because the market structure moves in waves, and it needs to do the retest when it breaks out of a market structure like this. Make sense? Anybody here? Dalalat, do you hear me? Gonzalez, do you hear me?
Yeah, we're good.
Yes, it makes sense.
Does it make sense? So your mind needs to be like you're playing both scenarios. So you wanna be in the right side of the trade, but you're waiting for these things to line up. You're waiting. Last week we were watching this trade, and I said to everybody, no, don't get in the trade. No, don't get in the trade. A few people got in the trade and they got caught with exactly what I said. All right, guys. So We're just waiting for the confirmations of what we need, and we're looking for a reversal. Now, everything that I just showed you, from identifying from the monthly what's going on, identifying from the weekly what's going on, applying the Fibonacci level, identifying from the daily what's going on, everything, this is the same exact strategy over and over I've been using for the last 4 weeks or 5 weeks, and I have not had a loss in the last 4, 5, 6 weeks, just using everything I just mentioned from A to Z. If I had a loss, it was very minimal compared to my wins, because you are going to have losses. I'm not going to say you're not going to have losses, but when I compare it to my wins, my overall account is in green, is to the upside. You understand? Because I will take a loss here and there once you identify that the trade is no longer valid. But if you keep that consistently, right? If you keep taking the trades in that particular fashion, keeping your losers short and letting your winners run, let the winners run. And all these things, you know, that I've just explained over and over, I've heard it from different traders that trade Forex. I've heard it from JL, but until I've experienced it for myself, the last 4, 5, 6 weeks, it's been a game changer in the sense that, you know, losers, cut them short. Winners, let them run. If I'm waiting all this time, watch, I'm waiting for weeks for UCAD to set up. Why am I going to cut it short? Why would I even do that? If I know that she's going to potentially do what I'm saying, in the sense that market moves in waves, it's going to come back, retest here. I'll want to observe. Okay, so let's say we take the short from the high over here, price breaks to the upside. I already know that this area, when market reaches here, there's a potential it's going to shoot up. So I can potentially start watching price here to see if it breaks back into the trend and it just continues going. And all I got to do is continue trailing my stop, trailing my stop, trailing my stop, until eventually she exhausts us now to the downside. Okay. And your targets, let's say we're taking it from here, the targets are going to be every fib level. Okay, I reached this fib level, I reached to the next fib level, I reached to the next fib level. As she continues to break through every level, you just continue to hold and hold and hold. Who saw when I called UCAD from the bottom over here on January 7th? Anybody saw when I called it?
I remember when you called it.
Huh?
I remember when you did.
It price bounced from here, and when you put the Fibonacci, it bounced right off the 127, never came back, and it jumped all the way up here. This trade over here, I made some money on this move, but then I closed all my trades because I was experimenting with basically what I'm explaining to you. But I've seen time and time over the last course of the last 4 or 6 weeks, it has been working. Okay. Anybody had any questions on what I just explained? Just so we can move on to looking at some trade setups. Since we discussed this all on UCAD, very well know UCAD is in a very primed location for sells, right? And what you can get out of today's webinar is the following right now, currently, is basically ranging this market, and all you're waiting for is the break. Does it break to the upside? Then, you know, you continue to hold. If it breaks to the downside and then you get the pullback and the retest, you're going to enter on the retest, okay? If you want to be an aggressive trader, you could take from the high with a very tight stop loss, very right above these areas here. So in the event that it goes against us, then okay, we're out of the trade negative. We were trying to be aggressive with an early entry, okay? If it breaks to the downside, then we're going to have a conservative entry, and then we wait for the pullback retest and continue to the downside with a stop loss right above that as well. So that way, if in the event it wants to reverse, you know, because potentially there's never nothing guaranteed or confirmed. You have high probabilities. That's all I can really tell you. Nothing's going to be ever guaranteed in the Forex market or in any market particular. I don't care what market is you're trading. There's nothing guaranteed. Price can go wherever the hell it wants. Market is going to do what she wants, when she wants, whenever she wants. You just got to know how to move with her. And that's all we're trying to do. We want to move with her, not against her. And I'm referring to she, but it's just how it just comes to my mind. Does it sound simple, guys? I want some feedback. I want somebody to engage me on what I'm saying So that way I can go on another chart and see that I was not prepped for this and show you exactly the same thing I'm talking to you on another chart that I have not studied. No, nothing? All right. So I'm assuming everybody's understanding, and we'll continue moving then. If no questions are being asked, then I'm going to assume you guys have acknowledged everything I have said. I'm going to assume that you understand everything I have said because I'm asking the questions and nobody says nothing. I'm going to expect for you to understand. Simple as that. So UCAD this week sells. That's what I'm waiting for. That's what I'm looking for. I already have an entry already before the close because I'm expecting a possible gap to the downside due to all the selling pressure. If I'm incorrect, like I said, I'll get stopped out and I'll be fine with it, and I'll just wait for the next entry of opportunity for a sell. But if you're gonna take this trade with me, just pay attention to the range, look at it from the 4-hour, and if price respects this zone and breaks to the downside, like I said, wait for the retest. And then after the retest, you take the trade. If it breaks to the upside, then what I'm going to do is I'm going to just continue waiting until I see the reversal perspective coming into play. The next trade I got for you guys is that I'm looking at is Euro USD. Euro USD has extended to the downside, so I'm going to pull that one up. Euro USD, where are you? Watch list. All right, so Euro USD. Let's go from the weekly. As you can see, I already was doing my homework on this from what I was seeing. On the weekly, on this leg here, I'm measuring just this previous leg from low to high. As you can see there, price came strong down, really hard down, broke past the 127.20, and it's in between the 161.8 to the 127.20. All right. So, and is at a support area, you know, slightly above, we could see a potential break to the, you know, potential push to get in here. But I'm expecting at a minimum, I'm going to expect a pullback to retest the breakout that it did over here from a weekly perspective. I'm expecting for it to continue to go down because it, you know, we could possibly see the continuation to the downside, and we're in a range, we're in a channel. If you look at Euro USD on this channel, you know, she hit against here. She basically has rejected several times on this downtrend channel. She made a hard push on this week that just closed, but I expect a pullback to the breakout for the continuation. Okay. Let's go to the daily. What do we see? Reset the chart. Okay. Same thing. I have not moved the Fibonacci. From the weekly and the daily, technically, if you see the leg, it's still the same thing. I'm measuring from the high to that low right there. I mean, from the low to the high, and price broke through this area. So I'm looking for potential reversal right now on Euro USD to the upside, which goes hand in hand with the following thing. If I'm expecting, keep in mind also another thing. If I'm expecting sells for USD CAD, I'm trying to sell the USD. Then from Euro USD, I'm trying to buy Euro, because USD then becomes the reversal from a correlation perspective of Euro USD and USD CAD. If you're going to trade those two at the same time, technically, if the dollar weakens, then it's going to weaken for most of all the other pairs as well. So if USD CAD I'm trying to sell, I'm going to want to buy Euro USD, because from a Euro USD perspective, price have moved significantly to the downside, technically saying that the US dollar has been strong against the euro. The US dollar has been strong against the CAD because it was moving to the upside. Okay. So over here, all right, so what I'm going to do is, from the daily perspective, I've identified the trend. I have identified that the price action from my Fibonacci level on the daily. So I'm going to go to the 4-hour. What do we got on the 4-hour? Okay. On the 4-hour, we're ranging down here right now. And right now, if I was to take an aggressive entry to the upside, where price is at would be the best price to take it. you know, if it breaks to the upside, okay? So I don't want to see break below that box, but I want to see it to break below that previous support that was there that you can see from a 4-hour perspective, which is right here. At the top of the box that I just drew out, if you see that, the top of that box is the previous support, which is now resistance. I want to see the break above that resistance and retest that level right there. Wait, I'm on the 60 minute, the 4-hour. Okay, so the 60 minute, that was the 60 minute. All right, so technically from a 4-hour perspective, we really don't have a range yet. But from the 1 hour is where you see the range. So, and I don't really like to look lower than the 4 hour. So you know what I'll do now here then? I'm gonna want to wait for price to basically range here. The only thing that I identified differently, I did identify something differently on Euro USD when we apply the indicators, is that Euro USD moves very sharply. If you look from when it rejects, there's very little to no consolidation. So this is one thing, like I said earlier, get to know the pair. How does that pair move? After every move, in comparison to USD CAD that we saw a lot of consolidation, this one is opposite. There's very little consolidation. It just makes sharp moves. So why am I bringing that up is because when you throw the indicator on, the information is too delayed before you get that signal to enter the trade. So I have to kind of apply a different method to enter Euro USD. Basically, I would rather prefer the aggressive entry because if you look, no consolidation over here. We didn't really have no consolidation. I had a sharp move to the downside, but the indicator was lagging to, the indicator couldn't reach price within time to give me that signal, hey, we're about to cross or we're about to go down. By the time it gave it to me, it already had moved pretty much 48 pips. I want to catch those 48 pips and opposed to getting in down here and there was already a 50 pip move. So if you look at every angle that she moves, you'll see that there's a sharp move. There's very little consolidation. Look at it there. Look at it here. Very little consolidation on Euro USD when she's about to continue to move. Very little consolidation. In comparison to USD CAD, when I go to USD CAD, heavy consolidation, heavy consolidation, heavy consolidation. Look at UJ. I've been doing the same thing with UJ. You look at UJ, same thing. I know I'm going a little bit fast, but I want you to get the picture of what I'm saying. Heavy consolidation. Heavy consolidation. Somewhat of a consolidation here before the move. Look over here. Heavy consolidation before the move. Heavy consolidation before the move. Consolidation. Get to know the pair that you're working with. You want to understand what is going on. That's the best way to kind of really trade these markets. You see how these zones, these boxed out zones, they tell the sign of what's going on. You got USD JPY does heavy consolidation before making these moves. But we're going to come back to UJ right now. I just wanted to show you the reason why you want to get to know your pair. So in Euro USD's perspective, you got these sharp moves where she moves quickly and you don't have that opportunity to wait for that window of those consolidations. You know, you may get it sometimes, but it's not all the time from if you do a little study guide on these moves from prior history. Because whatever she does in the history, expect it what's going to happen in current price action moves. Expect it. Okay? So right now for Euro USD, I want to buy it. And if I was to buy it because she's at the low of that right there, I would prefer just getting in now. Let's say Monday at the Monday, or even today later on. I'll get in now, put a stop loss right around somewhere beneath. Let me see that, you know, this area here. And technically the way I would do it would be the following way. Long position. Let's say I enter somewhere here. I'm going to put a risk reward. I set up my risk to reward. Let's say that I want to hit the retest of this breakout. That's going to be my target right there. This is going to be my target. The breakout of this retest, the retest of this breakout as a target. And then just consider what is going to be your stop loss. Oh, wait a minute. Why is this not giving me? Oh, I see why. Give me a second. There you go. All right. So put this like this. Put it here. Box in the range of how you want to see your stop loss. If price breaks below, then I should be out of this trade. But as long as the price stays within this area here, I'm still in good in for the trade to hit my target. Breakout, retest, and continuation. Remember that I said that from a weekly perspective, I said earlier, because of this big long candlestick, look where it lines up when I go now to the weekly. I expect a pullback because it broke this support, and I want the pullback here, or at least I want to trade till the pullback for the retest. And then when price reaches at this retest, I'm going to take another trade, but now to the downside as an example. Make sense?
Yes.
Making sense, making sense. But all this stuff, guys, instead of you trying to take a signal from some signal provider or what yada yada stuff that they do, I've been very heavily opposed to giving out signals. I just rather give you the trade idea. You want to know why? Because the real true trader understands when to get in and when to get out. What good does it do to you if you just take a signal and you don't understand why you're getting in or why you're even getting out? What good does it do to you? How does it educate you? How would you know if you have been progressively understanding how to trade if you're just taking signals? By the time the trader that is taking the trade gives you the signal, he's in the trade, and by the time you even get to see the trade, the move has already moved and you're in late. And then when you get in and you experience some drawdown, you're asking the question, yo, but I'm in drawdown. You told me to take the trade. Oh yeah, but you had it. And this is the reason why you need to learn how to trade so you can execute that proper timing market structure trade, market timing. So therefore, you didn't miss on 20 pips to the upside because you're waiting on a signal from some signal provider that just providing you signals, and he's the one in control. Make sense? Does it make sense? I guess so, because nobody's saying nor yes or no.
Jomar,
Yes, sir.
if you don't mind, maybe in a little sheet, in an extra sheet, or maybe you want to say it now, pairs that you think that you know that they move really quick, that there's not much consolidation on them. That will help a little bit.
You know what? I've been doing that one step at a time. I don't have what you're asking me for is going to take some time to build. So far, I've only worked on UCAD, UJ, and EURUSD. Every other pair, as I continue to develop that relationship with the pair, I will be able to identify that. But I don't know all of them off the top of my head because I've been working these ideas and these strategies one-on-one as I take trades and I find the opportunities. You with me?
No, and I understand. We could do the homework too. All we have to do is look left.
Yep.
When in doubt.
Yep, correct. So one of the things I've been doing, so just so you guys know, so you don't go crazy looking for all these pairs, so you don't go crazy trying to kind of, where is there a trade setup so I don't waste my time trying to break every trade, okay? I've been using this as my scanner. The reason why I've been using Outlook is all I'm looking for is which of these currency pairs have a 90% or more where all the position traders are at. And then I just go to those trades only for the week and break those down. Why? Because when I go to any of those setups, look, if you look at UJ, right? If you go to UJ, it says 92% shorts, 8% longs, and I go to UJ, well, the market and that information kind of makes sense. The market has moved down already to the downside, and there's a lot of selling pressure here based on the sentiment on what Market Outlook is saying. So what I'm going to do, I'll break down this pair instead of wasting my time trying to looking for the opportunity. So all I'm technically saying is I'm using Outlook to give me the basic scanner perspective. Okay, which trades are the ones should I be looking at? Okay, AUDNZD. This is another trade. This one I took weeks ago, and I'm holding the trade. I'm holding the trade right now. So if we go to AUDNZD, and I'm just showing you these from an example perspective of what I'm saying, AUD, NZD, people are longing. It says 85%. I already took trades all the way from the bottom here. All the way from the bottom. Same exact setup, same exact idea. I am telling you guys, you want to see, you want me to prove it to you? Here it is. A real account with those real trade setups that I'm exactly saying right now. Okay, hold on. Where AUD, NZD? Here it is. So here it is. Bought at the bottom, came back all the way up. As I saw making support, I entered another trade. I'm risk-free at this moment. Risk-free. Look at my stop loss in front of my entries. Look at price all the way up here. You guys get it? Are you understanding now?
Amen.
Okay? I'm not bullshitting you on what I'm telling you. This is a real account. I'm up 185 pips already with $1,110 currently in profit so far. Trade goes back against me. Okay, so what? I didn't lose anything. All I'm looking at for that long-term perspective. And watch this, higher time frame, right? If I go to the higher time frame, look at that bullish, beautiful, lovely candle that just popped up on the weekly from last week. Look left and look at every engulfing candle. What happens when reaches at this level? Look left at every single time that price. Tools. Let me see. Charts. Insert. I want to just show you. Okay. Insert a shape rectangle. Look left. Engulfing to the upside. Engulfing to the upside. Engulfing to the upside. Engulfing to the upside. So should I close this trade? Who can tell me the answer? Why should I close that trade?
No.
No, that shit is gonna go up there. Okay, all right. So look at the Fibonacci. Okay, I'm gonna measure the previous leg. So, okay, hold on. What? I didn't on AUD NZD. I don't. I mean on my MT4. I don't have the Fibonacci set up. But let me just show you from here, from this perspective. Okay, I'm gonna go to the weekly. I already have it set up over here because this is my target, the 618. 61.8. I already have it as my target. Look at the same setup over here. It's the same thing, just that I'm using TradingView for the analysis part only. Okay. Look at it right there. I'm targeting 618. Why? Because it's a beautiful target to always go by, but breakout never retested. Will the market hit there? Okay. Look left again. Where did price reverse from? Okay, look left again. This is a very possible. It's a very high possibility that's going to hit that target. Is what I'm trying to say. And here's how we'll identify that. 3 weeks from now or 4 weeks from now, I'll pull out this trade and we'll see what happens. That's going to be my kind of resource to kind of show you that what I'm teaching you guys here, it works. You just need to be patient. The real key thing here is patience. If you don't have a key patience to hold the trade in a positive environment for a few weeks, then you know this strategy may not be for you, because there are people that want to get in and out of the market, which I understand, but I'd rather just get in one trade and not have the nonsense or the headache to deal with the daily perspective of being wrong every single day. I just want to be wrong one time, and if I'm right one time, I'm going to be right for like 5, 6, 7 weeks, and I'll just continue collecting as she pushes up. Is it going to go in one straight push up to the upside? No, it's not going to go one straight push up to the upside. Market is going to consolidate. It's going to go in basically in waves. You can't see it too much from the weekly, but look, from the daily, it kind of pushes up, comes back down, pushes up, comes back down, pushes up, comes back down, pushes up, comes back down. Over here, it came down, it actually fell really hard, but then when it reached this level, it kind of was resisting at this area. Now, this is a trade that Gonzalez is on this trade, and a few weeks ago, we were trying to buy it over here. We were trying to buy it in this area. Market wasn't ready. Okay, watch. Okay, Gonzalez, and I know you're here. I'm using this as an example of what I'm saying when we were trying to buy it, but unfortunately, the these strategies that I've kind of encountered, we didn't know it at that current moment. But look, had I known what I know now a few weeks ago, I would have never been buying. Why? Look at the EMAs, how far they are apart are. I never got the signal to start crossing. The signal gave it when price was down here. It's saying to me, yo, get ready, we're about to come up. Get ready, we're about to come up. Look at the histogram. The histogram was still giving me a bearish environment up until it reached this level over here. But you know what? There was heavy consolidation over here, and look at the consolidation. And what did I do? I bought the low. Why did I buy the low? Because the low, if I'm going to buy the low, gives me the better perspective that if I get in at the low, okay, price will need to break below here in order for me to get wiped out. That was the best entry possible. Okay, look at the weekly one more time. Watch this. There was a trend going on here in my favor. There was a heavy support here going on in my favor. Why did I persistently was behind that trade? For those same exact reasons that I'm showing on UCAD, that I'm showing on Euro USD currently right now, for the same exact reasons. All right.
Can we take a look at NZD USD?
NZD USD?
Yeah.
All right, give me 1 second. The NZD USD. This one I haven't really traded yet. I think I did plot it out something the other day. Okay, so she's currently she's retraced 61.8. I got a hunch that this is at the 61.1.8. We got a resistance level right here. Look left. You see left. Got the resistance level pointing right there. You got to train your eyes to see this immediately. Left, boom, resistance. That's where she's at. Put the Fibonacci from here to here. She's possibly at the 618 area right now. Let's see if I'm right. Maybe 50%, between 50 and 60, 61.8. Where are you? Come on. Okay. 61.8. 61.8. Okay. So what else do we want to look for? Okay. So we know we have approached the 61.8 area, which is the golden zone. We see that we're sitting on support. Okay, great. We got four folders next week for NZD right here. Look at them right there. For Tuesday, which is in 3 days or 2 days. So we would need to do some investigation right now. What this news, try to kind of get pre-release data. Sometimes if you do some due diligence, you could probably find some sentiment on what other traders are doing the same thing. That's like a different whole thing I'm learning right now, how to get all this information before the market makes its moves. Okay, so we know we got 4 red folders. Okay, once again, if I'm expecting USD CAD to drop, and I'm expecting to buy Euro USD, what should I expect with NZD USD? Because you have a USD pair here. So let's say potentially USD is weak next week, then this trade should reverse from here and bounce because we're in a supported area. We have retraced 61.8 to the golden zone here. Okay, we're looking at from the weekly. But is it a guarantee? No, it could potentially continue going down. But if that is the case and you want to take a high probability trade, you know, and you basically you put your stop loss right beneath that low there. So if it breaks, you're not gonna get a crazy hit, as an example. But I'm not too sure with NZD USD because I haven't been following her. I don't know her patterns yet. This is something we would need to kind of develop it. But you get the picture already what's going on. We're at this area. It could be a potential reversal area, you know, a likely reversal area. We're sitting on support right now currently. Okay, so let's go down even further down. Let's go to the daily. What can we see on the daily? We see the same thing. Left, support. I mean resistance, now support. But look at the EMAs. Should I get in? Look at now if I go down to the, let's say that's the daily. But the daily, I don't use the daily to use the EMAs. I use the EMAs only from the 4 hour. But look, no way should I be even attempting right now to even buy that yet. It's not ready because The histogram is to a bearish environment. The EMAs on the MACD cross to the bottom, not even to the upside. It crossed to the bottom side, and the EMAs on price action is telling me the same thing. All right, so she's not waiting. We wait till the end of the week instead. Don't get in. You're gonna put this on your watch list now and start identifying. You're waiting. You're waiting. You're waiting. You're waiting. You're waiting. You want to put this. You want to put this on your watch list, Jose? You're gonna do exactly what I'm telling you right now. We're going to watch her do what she's going to do for the whole entire week. Who cares if we miss out on a potential big move? I don't care. I just want to be right when I get in. That's the whole key thing here. So what do? You have to wait and let her do what she's going to do so you can then take advantage of her. Okay? So she could potentially break to the bottom side, but she could potentially break to the upside. But I don't have all my confirmations, all my ducks in a row to take the trade because these EMAs are telling me that we're still in the bearish environment, okay? All right, so does she consolidate before she makes a move? Let's identify that. Does she consolidate before she makes a move? Okay, no consolidation here, but she moved. Okay, we did have some consolidation here. We did have some consolidation here. We did have some consolidation here. So she kind of does consolidate, but not consistently, I would say, from what I'm seeing. But the problem here is right now, in order to buy NZD USD, because NZD has been weak along with AUD for the whole entire week last week, is that this could potentially continue to push down. So, and I don't have the confidence yet to see that she's ready to come up. Maybe she'll hit the next level. But I could be wrong as well. Maybe the NZD news for Tuesday is going to be positive, and then you get to shoot up. And everything I'm saying is all probabilities. So I know, so here's what's going to happen. A lot of people are going to want to buy right now because they see that push extended move like you're seeing it, but then they're not playing into, you're not putting all your pieces of the puzzles together in order for you to take the trade. It's a good potential buy, but she may not be ready yet. We want to wait, okay? We definitely want to wait on this one. Look at this. You see this leg over here? See this leg over here? From low to high, this hit the 161.8, not even the 127. If I put the Fibonacci on that leg right now, look, on the weekly, like I've been saying, I'm going to measure from the low. The low is right here, that wick right here. Look at the high. Look at the price. Where did it react? This one went even lower. It's between the 127 and 61.18 and reacted from that level and bounced off that trend line that she was from the higher time frame. As I continue to continuously repeat the same information, just because this is all I've been doing for the last 2 months now, you know, I had a trend here. I really only had 2 touches, but this one made the 3rd touch right here, and it bounced off of that area right there. Now, from a monthly perspective, this is going into basically a squeeze. Once this breaks to the upside or to the downside, we can expect a break, pullback, break, pullback. I don't care where it's going to go. If it goes to the upside, it's going to pull back. If it breaks to the downside, it's going to pull back and retest one of those trend lines. So to answer your question, Jose, on this particular trade, I would rather wait before I get in this trade. Now, let's see what the outlook on the sentiment for FX, my FX book is saying, where most of the traders are right now. What is the sentiment from? Most people are longing already. Look at that, 89%. But I don't have the confidence because I don't see what I need to see first to take the trade. So you know what? You know, let's think like the other side. Let's want to wait and see. And if you don't want to miss the move, it's simple. Here, I got even a good idea. You don't want to miss this move? You want to take advantage of the move? What should be what? I want to hear from you right now, somebody in the room that's been listening to me for a couple of days now. What should we expect to happen if we want to take this trade to the downside or the upside? What should happen? What should happen, guys? I'm going to tell you.
I'm going to say that.
No, I'm going to tell you. If it breaks to the upside, wait for the pullback, retest, and take it to the upside. If it breaks to the downside, break the downside to the support, and then you're going to wait for the pullback. You sell at the pullback, you buy at the pullback. Either way, it does go. And at that given time and moment, if it goes to the upside, you could see the indicator have already probably crossed at that time, because what it's going to build is going to build the break, and then you're going to see the momentum then start switching on the MACD first, and then the pullback, you buy at the pullback. By the time that all happens, the momentum and the MACD is going to tell you is going to be in your favor for the upside now. Okay, but if it breaks to the downside, we already have momentum to the downside. It's just a continuation. It broke through the 618 level, and we're going to continue to go down no matter what. From the daily perspective, from a Fibonacci perspective, we only hit the 61.8 level, and we can continue to go down in full retracement or possibly bounce off the trend line. Look at the trend line. It's not that far. The trend line that is from the higher time frame, it's only literally 78 pips away. It has a very, 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 very bearish environment to hit that trend line right now before it goes to the upside. Highly likely possibility. So you just need to be patient and apply the breakout. And one of the things I've been preaching all along the last couple of days within the chat room, guys, no pullback, no entry. If you're going to take a trend trading trade, no pullback, no entry. I don't care what happens. I could miss out on thousands of pips, but if there's no pullback, I'm not entering. Is Evelio still here? Evelio,
Yes, sir.
Can I put you on the spot?
Yeah, go ahead.
Okay, you took a few trades last week. Did you take them at the pullback or no?
Nope.
And what happened?
I got stuck.
There you go. He called me because, yo, what should I do? What should I do? Right? Okay. And I'm not trying to put people on the spot. I'm trying to have you understand the information. I want you to understand the information. This is the trade right here. He got caught selling by mistake or whatever the case was. And how I helped him was the following way. Okay, you're in a bad trade setup, a bad position. I boxed out the zone for him. Did I do this or not? Tell me if I did, if I'm lying or not. I boxed out this right here. I told him, hey, here's what you should do. Okay, you're trying to sell it. Okay, great. So if it breaks the range, then the trade is in your favor. He was already in it. If it breaks the range, the trade will continue to the downside. But I told him the following. I think it has a potential to go to the upside because break, pullback, retested, and dropped. I told him this before it all happened. And I told him, if it breaks to the upside, exit the trade. You should have a stop loss right above that range. Did I say that? Yes or no, Evelio?
Yes.
All right. So technically, that was a loser trade for him, but that was a lesson also learned for him to understand to wait for the pullback and don't just hop on.
No, I didn't lose in that trade.
Oh, you didn't lose?
No, because I re-entered it. And I got it, I got like 100 and something bucks. And also inside the box.
Yeah.
Inside the box, I also collected some money.
Okay. But the point is here, you were in some sort of a position that you were uncomfortable because
Yeah, I wasn't comfortable because it was ranging there.
Yeah.
So I took advantage of the ranging and I took profit and, while it went from the top to the bottom, from the bottom to the top. And then when I woke up, it was already out of the box. I wasn't even aware that it broke out to the upside.
So I posted a picture of this potential trade to the upside right here before it even happened. Although it didn't go all the way to the top, but it was just kind of how I set it up. So look, just go straight up. If it had breaking back into the trend, then it definitely would have hit this. But I told them before it happened, if price structure does not break, look at this. Look at this. I told them, you see this area here? It aligns with the trend. And whenever you have a resistance or support aligning with a trend, oh boy, that's an area that is very powerful. So I told them there was a very high chance that price was going to reverse from this area. Watch. I took a screenshot and I sent it to him before it happened. Hold on. I'm going to pull it up.
I remember clearly.
I want everybody to see it so you understand what I'm trying to say. Hold on. I sent it in the general ideas, or was it in the TPA ideas? I put it in the TPA's idea. Look at it right here, before it even happened.
Yep.
See that? I boxed it out for him, and I told him, hey, you know, it could potentially go to the upside, but if it doesn't break this zone and it doesn't break that trend line, it's coming back down. That's all it is a breakout, retest, continuation to where she was going to go do. So the main reason why I tell you, stick this in your head. No pullback, no entry. Simple as that. Keep that in your mind. No pullback, no retest to a previous break, no entry. I don't care what the hell's going on. People could be making millions of dollars. I don't care. No pullback, no retest, no entry.
What, when you say pullback, Jomar, is it in the 4 hour or the daily or the
I use it from the 4 hour. Yes, from the 4 hour is what I prefer. Other traders may prefer the 15-minute, but I prefer the 4 hour. I've been successful with the 4 hour. No need to change it for me.
Yeah,
it's not broken for me, so it works. But
yeah,
some other people will prefer the 15-minute. It's just everybody has a different opinion on it, and nobody's wrong and nobody's right. It's just different perspective. As long as you're making money, you're right. My perspective could be correct as well as your perspective could be correct. There's no right or wrong answer in this. It's just all trading psychology, and it's all putting your head to work and paying attention to what price action is saying and looking at your zones and having more than 3 or 4 or 5 confirmations in your favor for a high probable setup. That's all you're looking at. Nothing guaranteed.
Yeah, was exactly what I did yesterday with Bitcoin. I waited and waited and waited, and then when it hit the 4 hour retest, I came in.
There you go. Did you make money doing that same strategy I said?
Yeah, over $400 with 25-cent lot.
Breakout, retest, and pullback, right?
And it wasn't that even that many pips. It was, it was good.
I know. Thank you, Jomar. Thank you. I'm just saying, guys, it's for about a year, I've struggled with understanding this information. I'm going to I have another person here. He has not spoken, but it's okay. The name is Lucho, my best and very good friend. And I went into buying a whole fucking ton of indicators and trying to look for that edge and this and that and blah, blah, blah. And to only find out that it was just that simple and, and just kind of say, understanding market structure, price action, indicators lag. Everybody understand that the indicators are only used in a form of confluence for what you already have. And the only way I'm using these indicators is only for confluence and at the same time to execute market timing. That's all. Other than that, I don't use it for my technical analysis aspect. I put that in last, and that's pretty much it. So guys, it's already about to be 1 o'clock. I wanted to just keep this to 2 hour time frame window so we could keep doing this every Sunday from 11 to 1. We'll continue practicing this strategy, trade setups. Basically we'll continue to practice this. And what we could do is from this session, we can review what happened with these same pairs and where is price at, so we can continue to follow it. But the trades I'm going to be looking at for this week is USD CAD, just so everybody knows, USD CAD sells, Euro USD buys, UJ sells, and if I see proper market timing to get in, I will get in. But once again, practice what I've been going over with you guys for the last 2 hours. This is being recorded. I will upload it to the Discord app, so that way you guys can rewatch it. If you have questions on anything, also DM me. If I don't respond immediately, I'll respond once I have time. And just wait for me to respond, but I will respond to you guys. And if anybody needs help with the information I've been able to just explain over the course of the last 2 hours, I'm going to redo this again next Sunday again. I'll re-explain the same exact strategy, the same exact setups, and in the essence of what I'm looking for to take these trades. And that's pretty much it, guys. If you guys have any questions, let me know. I'm here for you guys. I went through a lot of struggles, trust me, to get this understanding of what I have so far going on right now. It took me a bit. I've put in my time. When I put in my time, I've watched hundreds of YouTube videos, hours and hours long, late nights, you know, and this is basically all I'm doing. I just kind of just focus on what I'm trying to do. And when you focus on something, you could get it wrong 100 times, but it's not about getting it wrong. It's about not giving up. Because the only time you fail is when you give up. So with that being said, guys, I hope y'all have a great, wonderful weekend. Continuing blessing your weekend. And let me see you guys do these same setups. So submit some charts. I'll break it down for you. I see where you see some things may go wrong. Practice what we taught. Before you start taking a trade, let's do that. Practice what you saw on whatever currency pair you like. Practice it. What I've been saying. Go to the monthly, identify the trend. Go to the weekly. And then I continue identifying the trend. At that weekly, you put the Fibonacci level, identify where price action is. Then from there, go look for your support and resistance zones. Where is it? Identify also, on top of that, identify also pattern recognition. Do you have inverted head and shoulders? Do I have an M? Do I have a W? After every M, you're going to see a shoot to the upside to complete a W. After every M, you're going to see after every W, you're going to see a completion of the next M to the downside. So put all these patterns in perspective, identifying them, and it all be in forms of confluence. The only one last thing I did not speak about with you guys here was candlestick patterns. Candlestick recognition, what each candlestick has been using. I haven't been really applying that yet, but because I've only been using support and resistance, my Fibonacci levels, and conformance with trend and where price is at, and market data terms such as the outlook to give me a sentiment of what everybody else is doing, to have some sort of a picture of what that market is doing, and then also study that pair. Go back in time. What does she do? You know, what does she do before every big move? Does she consolidate? Does she consolidate? Do all these things repetitiously on every single currency pair, and you will see opportunity. All right, guys. Thank you. That was all. And I'm going to cut it there and see you tomorrow morning. We'll get on. Oh, tomorrow morning, just so you guys know, I won't be available. I actually have an appointment. So JL is going to have to be the one taking care of tomorrow's morning session. But I'll talk to you guys back on Tuesday. I'll be back on. Tomorrow I have, unfortunately, I have a court situation I have to attend. So that's pretty much it, guys. Have a great weekend and love y'all. Peace.